What's going on, everybody? Liam O'Reilly, Vermont economic realtor with Jerry Riley Real Estate. Banks are continuing to fail. If you've watched the news today, obviously First Republic Bank got taken over by JP Morgan. I'm sure you folks saw that earlier in the week, but bank stocks are down across the country. If we look at some of the regional banks, what they're doing, the stock price is dropping. So should you be concerned if you are looking to buy or sell residential real estate? What does this mean for the overall national housing market? We're going to talk about that in this video. So let's get right into it. First, what is the housing market doing? Now, this is something we've talked about many times on this channel, and I think this article does a great job at summing it up. Home buyers are eager to sell, but sellers are scarce, creating a real gridlock, right? The move-up buyer isn't there. People don't know where they're going to move to if they sell their home. And we've gone over this in some of the Redfin videos that I've done, talking about how home prices, they've gone down. They're down year over year, but they're trending upwards. And the average home price is down year over year, but it's still going up, right? There's more buyers than there are sellers. There's a lot of demand right now in the overall housing market. Now, that's not to say that every market doesn't have demand. And by the way, I'm not going through this article. I'll leave it in the description. It's a good article to read. It really talks about anecdotal stories about sellers who can't sell, who have locked in a low mortgage rate, right? Homeowners with low mortgage rates are delaying the decision to sell until market conditions change. So I'll leave this in the description. But we all know that the housing market isn't the same nationally, right? There is no national housing market. So where I'm at here in Burlington, Vermont, it's still a very hot market. So this rings true for the Burlington market, but it might not ring true for the Las Vegas market, for example, as I've said many times. So that's what's going on in the housing market. If we look at what's happening with the banking stocks, so we have First Republic right here. Market sinks on fears about banks and a weaker economic outlook. The relative calm that met the collapse of First Republic Bank on Monday, right? I mean, this was all expected. First Republic collapsing and being taken over by JP Morgan, was shattered on Tuesday with broad-based declines across industries, right? The stock market's down overall, but a lot of these regional banks are down. Their stocks are dropping. So there's not a lot of confidence in the banking sector. PacWest, way down. Western Alliance, way down. Banking stocks in general, I just Googled it. Some other companies that aren't listed there. Obviously, PacWest was on there, but KeyCorp, Comerica. I mean, these regional banks are falling, and they're falling quickly. So what do we make of this banking crisis? What do we make of how is this going to spill over into the housing market? Obviously, a lot of these small and regional banks, which these banks that are declining are regional banks, were heavily invested in the commercial real estate sector. So those banks, the commercial real estate market is experiencing hardship right now with higher interest rates and cap rates declining. That is affecting the balance sheet of a lot of these corporations. And then obviously we saw with Silicon Valley Bank, if they invested in bonds when interest rates were low, the price of those bonds have now dropped. Same thing with the price of commercial real estate that they might have loans out for. So look, I haven't dug into the balance sheet of these banks, but at the end of the day, there's not a lot of confidence in the banking sector, and we've already known that banks have started to tighten up their lending standards. So as far as the commercial lending that's going on, the lending across the economy to businesses, to commercial real estate, whether it be apartment buildings, to home builders, banks are restricting their lending in all of these areas. So that doesn't necessarily mean that they're restricting lending in the residential real estate space, right? If we think about the fundamentals of residential real estate, mortgages are sold on the secondary market through Fannie Mae and Freddie Mac, where loans are initiated or originated by banks and lenders, and then those loans are packaged into mortgage-backed securities and sold on the secondary market. A lot of these banks, a lot of the commercial loans, the tightening of lending, that has to do with banks or with mortgages that they're holding on their balance sheet. So as far as residential real estate, do I think the lending standards are going to get tighter as a result of these banks failing? I personally don't think so, because these banks don't hold a lot of residential real estate on their balance sheet. Now, they might have mortgage-backed securities on their balance sheet, bundles of residential real estate, but the loans that they're originating for, the residential loans that they're originating, are sold on the secondary market and are not held on their balance sheet. And there's already pretty tight standards around them. So how I think this could affect residential real estate. I mean, this could have spillover effects into the economy. I think if you're in one of those hot markets, if you're in a market that is hot like Burlington, I think we need to see drastic changes in the supply and demand dynamic before we're going to see anything happen to prices. So even if this causes some buyers to leave the market, there's still not enough sellers, as we saw in that last article, to really cause prices to drop around here, around Burlington, and in some of these hotter markets. Now, every market is different, and I think if in markets that are already seeing declines, like Vegas and some of these markets out west that have maybe overbuilt over the past few years, I think those markets could be significantly affected by this, where it's not going to bring a balance to the market like it might bring to a market like Burlington. I think it could cause prices to significantly drop. I also think we could see a spiral, and really what I think we would need to see in order for it to drastically affect some of these hotter markets across the country is we would need to see unemployment rise. And I think that if banks start to fail and we start seeing a systemic banking crisis, even among the smaller of the banks, that could start to spiral and cause unemployment to rise, right? If banks are lending less on the commercial space, that's less money in the economy. If they're lending less to businesses, that's, again, less money into the economy, less businesses expanding, hiring people, less credit available if businesses need it to expand their business, to pay payroll, things like that. That could lead to tightening of the economy and a rise in unemployment. Now, if we see it rise significantly, then I think we could start to see extreme ripple effects across residential real estate. And I think this banking crisis, or what's going on with the banking system right now as a result of the Federal Reserve raising rates, is likely going to drastically affect the commercial real estate market. But I think there's a few more dominoes need to fall before it affects the residential market. So let's get into see just so we know what's going on with these banks. So First Republic seized and sold to JP Morgan Chase. PacWest stock lost almost 30% of its value. Its worst single-day drop since the height of the banking turmoil in March, right? So it's not over. It was a pretty calm day yesterday, but these banks are in trouble, and the market is reflecting that. Western Alliance sank about 15%. Commercial and Zions also suffered double-digit percentage declines, and this is just today. So it'll be interesting to see what happens tomorrow with the Federal Reserve. I think they're still going to hike their Fed funds rate by 25 basis points despite all of this. But I don't think it's good news for the banking sector, and I think the more turmoil that we experience with these regional banks and in the banking industry, the sooner the Federal Reserve is going to pivot, either pause or potentially drop their rate. And now if they do that as a result of the banking crisis and not without letting unemployment skyrocket, so if we have high employment, or if unemployment's low, and the Federal Reserve pivots to stop these banks from failing, then we could see an even more competitive housing market, right? Because that means interest rates are going down. There's still a ton of buyers out there. There's still not that many sellers. So supply is still tight. I mean, we could see home prices take off if that's the case. So we'll be watching this carefully. We'll be reporting on it on this channel, and we'll be watching to see what happens, how the housing market reacts. Luckily, the housing market doesn't react as quickly as the stock market, so home prices don't skyrocket overnight. But we'll be able to watch what's going on in the macroeconomy and try to use that to help us make better decisions about our home decisions, whether to buy or sell a home. So anyway, Liam O'Reilly, Vermont Economic Realtor. Let me know what you think. Leave a comment in the description. Would love to know your thoughts about what's going on in the banking system and how that's going to affect the housing market. And all my contact information is in the description. If you're looking to buy or sell a home here in Vermont, be happy to help you. If you're looking somewhere else, be happy to find you a great realtor. Other than that, I'll see you guys in the next video.